Hello.
JT, how's it going?
Pretty good. How are you?
Doing great, thank you.
Long time no see.
It has been. Are you gonna make it up north to any shows this year?
Gonna make it to Rolog.
Cool.
And hopefully bring the Heart Par. So,
Nice. That's
yeah.
right. They are featuring Heart Par this year.
Yes, sir.
Awesome.
We're pretty excited.
I bet so. Have you run that one a while? Or have you run
It has not run yet.
Okay. All right. Awesome.
The engine is actually up at KR's right now.
Okay.
And everything else is in our shop, and it'll come together.
Nice.
Anwar, is that one of your self rolls?
What's up, brother? How are you?
I'm doing well. How about yourself?
Good, man. Long time no see.
Yeah, no kidding. Anwar makes his own cigars, so he's pretty good at it. Phil, man, I haven't seen you in forever.
What's up? How's it going?
Pretty good. How about yourself?
You know, just living the dream.
Good. Wait for everybody to roll in here. Can y'all hear me okay? Great. We had 42 people register. We got 17 in here right now, so we'll wait till we get closer to half. I even cleaned off my desk a little bit for you guys. You can't tell. Did you guys have to create accounts to register? Or did it let you do it without having an an Evite account or Eventbrite? I mean,
yeah.
You did. Okay.
I logged in using my Google.
Oh, gotcha.
Yep. Same here.
I haven't used Zoom since the beginning of COVID. It's changed a little bit.
Oh yeah. Yeah, they've made it a little more user friendly, I'd say. All right, that's 22. So we'll get rolling and let other people come in. I'm glad this is a good showing. I appreciate everybody wanting to hop on and learn a little bit. It is I've done this presentation 2 other times, and I've edited it a little bit just because of changing market conditions, and my lights just went off. Timer. Changing market conditions and also just kind of changing technology. So I want everybody to understand like what, not only what the cryptocurrency trading has and what the investment means, but also what actually runs it. So we're going to start off a little bit on that, and it might blow your mind a little bit, make you think a little bit more and want to Google a whole lot more too. So I'm going to go ahead and share my screen.
JT, quick question before you start.
Yeah.
Is there a way where you can share what are you going to talk about to go over it later on? Or
Yeah, like send you the deck.
yeah,
Oh yeah, I can do that.
cool. All right, thanks, man.
You bet. So I want to start off by saying, and I will say this at least 5 times, that nothing I am talking about tonight is financial advice. I want no responsibility whatsoever in your decisions with your personal finances. You know, I want you to do your own research. I want you to know that people will scam you. Like there are probably as many scam projects out there as there are legitimate ones. So we're going to get in a little bit on that tonight and how you can kind of tell the difference. Sometimes you can make a lot of money in scams, and other times you'll get the rug pulled out from under you and you will have no recourse in most cases. So this is DeFi. This is decentralized finance. There's no FDIC. There's no credit card company to buy and say you had a fraudulent charge. You are the ruler of your domain. You are the ruler of your keys and the ruler of your funds. Nobody can tell you what you're going to do with them. Nobody can take them away, but you can give them away. So be careful. So as most of you know, I helped launch, I was one of the founding members of a blockchain project called Telos. We launched in December of 2018. And I talked to these people every day since 2018, almost every day. And so I went out, and when I told them I was going to start doing this project, I was going to put this little primer together. I said, tell me, what are all of the disciplines that are required to be a master of blockchain and crypto and NFTs? And this is a partial list of what we came up with, right? Economics, finance, game theory, psychology, cryptography, intellectual property, mathematics, computer science, accounting, law, history, and anthropology, not to mention marketing, which is also is playing a huge role, especially this year, playing a ginormous role in crypto projects. If you can get somebody famous to go out and shill your project, then you get 20 million views on TikTok, and the next thing you know, your 0.00005 cent token is now worth like half a cent. It's been a truly crazy ride this year. So what is decentralized finance and blockchain and cryptocurrency? What is the problem that we're trying to solve? Right, you've got this huge huge octopus with centralized data within Apple and Google and Microsoft Azure and Facebook and Amazon, right? And then you get all these tentacles that go out in community, city managers or a homeowners association, small government. You got housing development down here. You got people on their phones. You got cash. You've got the government, right? You've got all of these things that are all tied back to this big data that a very small number of people have control over. One of the examples I used recently was, whether or not you you agree with them, but Parler, for instance, the extreme right-wing social media platform that was being hosted on AWS, that's Amazon Web Services. And as soon as it became like a bigger deal, started getting out in the public, and Trump was supporting it, AWS is like, oh, no, we don't want anything to do with that. And they just pulled the plug, right? Completely pulled the rug out from under the entire Parler community, everybody who was running it. And whether or not you agree with Parler, I don't think that any one entity should have been able to do that. So that's part of the problem, part of what we are trying to solve, not just with cryptocurrency, but with decentralization. I'm going to say that a lot. Decentralization is everything that blockchain is about. So blockchain criteria, what is a blockchain? We're going to get into that a little bit. Blockchain is a growing list of records that are grouped into blocks. They're all grouped together and tied together using cryptography. For those of you that don't know, that's really complicated math, right? It's mostly unbreakable math. Each block contains a hash of the previous one. So as blocks come out, the hash that makes up that block, and we'll get into that in just a second, is tied to the next block, so that you can't have a hacker come in and try to sneak a block into the chain that's got the data in it that they want. Because if the hashes don't match between blocks, then they won't have consensus and it'll be thrown out, which is pretty slick. And then all of these transactions on these blocks are validated by multiple independent entities, mostly companies or individuals, large organizations that are using different types of consensus that we'll get into. So you can, in its simplest form, you can think of a blockchain as an append-only spreadsheet, which means you can never go in to this spreadsheet and change anything that came before. It is permanent, and it will never leave. It will always be there for reference. Now you can go back and you can use that data and build a delta from it to make a new data set or a new data entry, but it is ever growing, everything all the way back to block one of whatever that chain that was launched. All of that data will always be there no matter what. We have what's called Byzantine fault tolerance. And if you're ever feeling like super frisky, go on Wikipedia and look up the Byzantine problem, specifically with the generals, the Byzantine general problem. It's a very fascinating math problem that has to do with attacks and deciding whether or not to attack or retreat. And it's a problem with decentralized systems that had to be coded out. So the fault tolerance that we have solves the Byzantine problem. So each row is a transaction that of the data that comes in on the blocks, and I kind of want to show you that right now. I've got mine running. So this is the logs of one of my chain validators for the chain that I launched called Telos. You see each one of these lines. Let me close this out. Each one of these lines is one of the validators. So on this particular chain, every validator produces 12 blocks, and then it moves on to the next validator. So you see every single one of these blocks has a timestamp. It's got a hash, this receive block hash. It's got the block number that we're on. It's got the date and time. And then it's got who created the block, and then also how many transactions were in the block. So you'll see that over here on the left side. It's got 1, 0, 1, 1. This particular chain, we built it so that it produces a block every half second. You've got Ethereum, which is very popular. They produce a block about every 5 to 15 minutes. Blockchain is about Bitcoin is about every 15 minutes. So they're very slow in comparison. You can track nearly anything on the blockchain. So the most popular thing of tracking on the blockchain is cryptographically scarce tokens, also known as cryptocurrency. No, that's what a lot of y'all are here to talk about, but also you can track things like voting. You can track NFTs. I don't know if everyone's heard of NFTs, but it's a non-fungible token. These are very popular right now. It's extreme, like in the millions and billions of dollars kind of popular. It's pretty crazy, actually. I never thought it would take off personally, but it's been an anomaly in my opinion. We could track auto parts, we could track raw materials, real estate, milk, beef, anything you want to track on a chain, anything that uses a barcode right now. This would completely replace that and be able to make a, if one of the things that we talked about when I was in college was like wanting to know where my milk came from. So if your milk had a barcode, or a QR code, I guess actually is what it would be, and could be tracked everywhere along its chain, right? Everywhere from the dairy that it came from, the cow that it came out of, what that cow was treated with, whether it was given hormones, what it was given for dewormer. All of this data can be tracked along the route of where the milk comes to the facility, where it was homogenized and where it was sanitized and put into a truck, who the truck driver was, and then ultimately where it was bottled and then sold. All of that data would be it's prime to be stored on the blockchain, because anybody would be able to go in and see the data worldwide very, very quickly. You just have to build an app to do it, right? Yeah. So I want to stop right there and see if anybody's got any questions.
One that comes to mind, JT, maybe you'll get into this, but are there certain blockchains out there right now that are better for that type of use versus others?
Oh yeah, absolutely. Mainly, and we will get into it a little bit, mainly right now, I would say that proof of stake blockchains are better for that kind of tracking, if we're using the dairy example, because proof of work blockchains become very expensive to be able to run transactions on, and we'll get to that in a bit. So speaking of transactions, when I say blocks, when we're talking about digital blocks, we say, okay, we've got transaction A and transaction B. You can have multiple transactions that get put together in a hash. And then those hashes are generated by cryptography. So whatever data is in that hash, and then like the time, whatever it makes up the hash, you never have two hashes that match. You will never ever have two hashes that match. These are huge numbers and blocks of numbers and letters. And then of the transactions that come in, you get these hashes that get combined, and then that becomes the hash signature for that block, and what is then tied to the next block. So you've got multiple transactions within a block. You can have hundreds, you could have thousands of transactions that get jammed into one block, which is really efficient, right? And is what happens on blockchain, especially on Bitcoin and Ethereum right now, especially with how many transactions are happening. Most of them are cryptocurrency trading, but you can also run applications. You can run, there's a lot of Instagram like applications that are coming out right now, because Instagram, as most of you know, is owned by Facebook. People don't like that. It's all centralized. They're farming your data. And so they're making all these decentralized replacements for things like Instagram and Facebook, so that the data is not centralized with one company who is trying to feed you exactly what they want you to see or what they want you to think. All right.
Hey,
So,
JT.
yes, sir.
Hey, and you may be going to get into this. I kind of had just a couple questions about the exchanges and their safety. I know, several larger exchanges have been hacked or, broken into. What makes like Coinbase and Robinhood and all those, what makes those safer than the other guy?
Yeah, absolutely. Well, when we get to the trading portion or the investing portion towards the end, ask that question again, and I'll answer it then. So, distributed consensus and validation. This is when we talk about security of a blockchain. This is really the meat of it, right? So first off, all of the software is open source, almost all. You can go on a website called GitHub, and in most cases, every project will keep their entire code base on GitHub. So in all honesty, you could even go to the Telos GitHub and you can grab our code and you can create your own Telos blockchain. Where you make your own rules and you mint your own tokens. It would take a lot of work. You'd have to get, a lot of other people to come alongside and help from a validation standpoint. But there's some companies right now that are running their own blockchains internally because of how efficient it is. And then they just run it on their own servers. So they'll have 6 or 7 servers that are all validating each other for large companies, and it's all closed, right? It's a private blockchain. So we had to come up with a mechanism to incentivize the service providers, right? So who actually, what's the incentive to run it? So there's 2 different ways that we get paid to run a blockchain. One is either through fees. We get a percentage of whatever fee for every transaction. Sometimes the fees are very high, as people have probably experienced with Ethereum or Bitcoin. Sometimes Ethereum fees for a simple transaction can be as high as $200 or $300, depending on how busy the chain is. When the chain isn't busy, it's much cheaper. And then you've got the other way, the other primary way, which is inflation. And that is where on a chain they mint tokens every day. Like new tokens are made and they're put out into a reserve account that then get assigned to the validators. So every day they or really every 5 minutes in Telos's case, it pays out. So it just puts it in a checking account for you, and then you can go and retrieve it. We go in and retrieve once a week because we have to pay taxes on it, right? So we retrieve it once a week. We record what the value is. We record how much we received, so that we can give Uncle Sam his money. Not everybody does that, but we try to stay on the up and up, right? So getting played by inflation. So, and then we have global redundancy. So, I've got my node here at my office in Waco. I work with people every day in South Africa, Iran, China, Germany, the UK, other places in the US, New York, California, a guy in Wyoming, a couple guys in Canada. Nobody really in India. I don't know why, but it's pretty crazy how decentralized we all are. And then we all run, as far as blockchain consensus and security goes, there are 3 main types of consensus. There's a proof of work, proof of stake, and delegated proof of stake. And we'll get to some pros and cons of those as you choose what projects you want to invest in here in a minute. So when people think of blockchain or they think of cryptocurrency, they think of speculative buying and selling. And I'm just trying to show you guys how much more it is than that, and how much more to look into the projects that you're possibly investing in. Because there's everything from microloans in Africa, project that I'm working on with a guy, to tracking healthcare, who's getting the vaccine. Like, do we want to keep that on blockchain? I think blockchain is, if we're going to have these little visas, if they're going to force us to have these vaccine visas, right? Well, why are we going to trust a piece of paper when we can put it all on blockchain and know that it's correct and that it can't be faked, right? I mean, everything can be faked, but it would be harder. Intellectual property, that goes to the NFTs, music, pictures, art, crowdfunding. I mean, we've got a project that we just launched on Telos called T-Starter, right? Where crowdfunding's people's projects now, where they go in and they build a proposal and they put it out for everyone to see, and people go in and say, okay, I want to give you 1,000 Telos. So we give them 1,000 Telos or 10,000 Telos, however many we want to give them, and then in return they give us more of their token, right? Their token doesn't have any value, but the hope is that one day it will have value. So anyway, it's kind of cool. All right, so another thing that to keep in mind when you're looking at these projects is whether or not the chain has governance. So most of the early chains, all of the early chains had no governance at all. Most of them were proof of work, and it was in a place where code is law. If the code said it, it cannot be changed. You hear these stories about these kids, right, that went and mined a bunch of mined 500 Bitcoin or 1,000 Bitcoin in 2012 or 2013, just playing around, and then threw that system away. Like, yeah, I mined some Bitcoin and I have my keys on a hard drive, and then that computer gets old and you just throw that computer away before it was really worth anything. That now it's worth millions and millions of dollars, just millions of dollars of lost tokens out in a landfill somewhere. There's a really interesting blog post that I read of a guy who actually went to the landfill where his computer would have been dumped and spent weeks digging through it, paying people to help him dig through this landfill to try to find his computer that was worth $50 million or whatever. I mean, it's just absolutely crazy stories like that. So as far as governance is concerned, when code is law, you always have the risk of loss no matter what. But on chains with governance, another example just happened last week, okay? So maybe 3 weeks before that, a very large company that was on the EOS blockchain had a smart contract that was doing some DeFi work, and a guy found a bug in the smart contract, and he was able to drain over $100 million of other people's tokens through the bug in the smart contract, okay? He brought it all into one account, and then he spread it out to 500 other accounts. And before he was able to hit an exchange to turn that into fiat or turn it into Bitcoin or Ethereum, he went to the contract, the person who wrote the contract, and said, hey, I found a bug. I drained $100 million, and for $100,000, I'll give it all back. Because I think he felt guilty, because it wasn't like this person's money. It was a lot of people's money. And so anyway, they're like, they kind of ignored him, said that they weren't going to pay him $100,000. And through their governance process, were able to get the chain validators to all agree to change the keys on all of those accounts at one time. Most of the validators that he got to agree with him were all in China, which blows my mind. I think he paid them off, honestly. And in that case, they had to have a 2/3 plus 1 consensus. So they, out of 21 chain validators, they needed to get 15 people or 14 people to change the keys to be able to retrieve those funds. Now, had it been a chain with no governance process whatsoever, it would have been lost forever. There wouldn't have been really anything you could do about it. The guy could have gone in, taken those tokens and washed them through a couple of gambling apps and just slowly drained them out to his bank, and he would have never been caught. All right. So how to invest? Are there any questions about that before we kind of shift gears?
I had a question about, he didn't really touch on like the distributed nature of this or like how consensus is done. Are you touching on that later?
No, but it might be a little bit too in the weeds. But the consensus algorithm, we'll get into a little bit here at the bottom of this slide, and I'll dig it in a little bit more. So as far as investing goes, you need what we call it fiat. We call any government-backed currency is called fiat in the crypto world. So you need fiat and an on and off ramp. So that means you need an exchange that you can connect your bank to, or that will take your credit card or your debit card and take your US dollar or your euro or your yen or whatever and convert it to a cryptocurrency for you. I recommend Coinbase. .com. Coinbase.com is good for the casual buy and holder. You can buy almost all of the major cryptocurrencies on Coinbase, the big ones, the ones, say like the top 50, the top 75 in market cap, you can get on Coinbase. And then you have pro.coinbase.com, which is their trading platform. Coinbase.com, you go in, you buy. It's really simple. It's a simple UI, it's simple user interface. But pro.coinbase.com is a little bit different. It's more like a trading platform for stocks. I mean, you have market orders, you have limit orders, you have stop orders. So it's very similar to trading stocks in that regard. In fact, I can I can show you mine. So this is Ethereum. Ethereum's at $2,916 right now. You get your market order, limit, stop, go in, say how much you want to buy, say place order. These are this is your spread. These are all of, and then over here on the right is all of the order book of how much the ones that are red are sales or buys and sales that are forcing the price down, and the green ones are forcing the price up. So it's pretty straightforward. So don't forget about your taxes. It is very important that you track everything for Uncle Sam, especially since 2020. On my and all of y'all's 2020 taxes, on like the first or second page, there's a big box and it says, did you buy or sell? Did it say, it didn't say cryptocurrency. I think it said virtual currency, or I don't know, whatever. Did you buy or sell cryptocurrency in the year of 2020? There's so many people that were making bukus of money and were not reporting it. And it was really hard to track, especially with the exchanges like in China, exchanges in Korea. Like they didn't care. I mean, they're not going to report you, right? It's gotten a lot more strict. Now, if you try to go in and like go on Binance, like the Binance Global Exchange, and they recognize that your IP address is in the US, it won't let you sign up. You would have to, from a degen standpoint, we call those traders degens that use VPNs to be able to trick the exchange and like make it look like they're coming from the UK or something like that. But anyway, taxes are very important. Coinbase has a tax report that you can use. So whether or not I use another exchange to buy crypto that is not available on Coinbase, I always bring it back to Coinbase if I'm going to go back to the US dollar, so that I have that tracking for the taxes. Because I may run for public office one day, who knows? Again, do your own research, understand the projects, understand some of the crypto terms. understand what decentralized finance means. That means that you have liquidity pools. People create these liquidity pools where there's two different types of cryptocurrency that you are able to go in and do a trade for. There's no centralized exchange. It's all handled in a smart contract. So the transaction occurs all on chain, and there's no third party intermediary, which is really, really powerful. It's extremely powerful, but it's also a little bit risky. So you just need to understand what DeFi is, what liquidity pools are, what rug pools are, for instance. So say you've got this liquidity pool, right? You've got this project and they've come in and they've put millions of dollars of their tokens on both sides. So say I wanted to take Bitcoin, and then I've got this other project, right? They've got equal amounts of both cryptocurrencies in their liquidity pool. And you go in and buy some, you buy some of their token. Well, then what they can do is they can go in and they can take their Bitcoin back out. And that's called a rug pull, which would then make you stuck with their token and you're not able to sell it. So that is that allows them to keep the price high and sell as much of the token that they've basically given themselves without you being able to sell through the dump. We call that a rug pull. That's just one example of a rug pull. It's also a scam. So that's why I specified locked liquidity pools, because the projects that are more legitimate will have a locked pool, and it will be advertised in the pool, whether, you know, if it's locked for 6 months or it's locked for 3 years or whatever. Very important for you to see when you do your research. Gas fees are another thing that you need to be aware of. Those are what you get charged to do a transaction on a blockchain, for mostly for proof of work blockchains. Now, the fees will vary greatly depending on how busy it is. If the chain is really busy, then the gas fees are going to be high. Like I said before, if the chain's not busy, the gas is going to be low. There's websites all over that show like how much gas is going to cost for you to do a single transaction on a chain. Telos, on the other hand, we have very, very low fees, like pennies. Our fees are nothing, and that's just because we built it that way. We built it on the inflation model instead of on the fee model. Most of the big projects right now that are coming out and just, you know, having 1,000% increase in just a few weeks are either on the ERC20 or the BEP20 chains. So BEP is a version of ERC that Binance came out with. It's on the Binance Smart Chain, the BSC. There are a ton of crap coins that are coming out on Binance Smart Chain every day. There's these projects. It's gotten ridiculous. You've got like Mooncoin, and then you got Safe Moon, and then you got Safer Moon, and then you got Safe Mars, and then you got Moon Mars, and you got Doge, and you got Safe Doge, right? You got all of these meme coins and meme projects that people are just trying to shill on TikTok and make a quick buck. So there's definitely the opportunity to make money there, but is not my recommendation.
Can you tell us what Binance is?
Yeah, Binance is an exchange. So Binance is the largest exchange in the world. They have two major exchanges. They have Binance Global. That's the one that I said that we cannot join as U.S. citizens. But then they came out with Binance US. So CZ, the CEO of Binance, they created a separate company in San Francisco that will allow us to go in and trade on the large exchange through their US branch. But the caveat is, since most of us on this call are Texans, Texas will not allow us to even use Binance US. And I haven't looked into why. So that's really annoying, but it is the largest exchange in the world, to answer your question. Coin burning and inflation. So a lot of these projects right now, you know, I already talked about the inflation model, and that's how they pay. You've got to be careful what the inflation is. Some of the inflation is variable. Some of the inflation is on a schedule, and some of it is just kind of at the whim of the project founder to manipulate the price. Same with coin burning. You've got these big projects that are minting like 1 trillion coins, and then they'll so Safe Moon is like a really popular one right now that does coin burning, and basically for every transaction that happens on their blockchain, which it runs on its BEP, so it runs on Binance Smart Chain, for every transaction that happens, they burn a token or a number of tokens. However many were bought or sold, they burn that many. So billions of tokens are getting burned a day through all these transactions, and they also charge additional fees in the transactions. So they charge where other projects might charge like a 2% fee, SafeMoon is charging 12%, but they're giving it back to their holders. So they're trying to get people to hold on to their token so that they can jack the price up. It's a really interesting idea, but it's, I mean, there's no utility to it whatsoever. Absolutely no utility. There's no tools that are going to be on it. It is strictly a money-making proposition. So then you have farming. So farming is what a lot of these projects do in order to increase their liquidity pools. So they have this huge amount of their crypto that they put into an account, and if you come in and you offer your crypto, you have to offer both sides. So say it's, you know, Bitcoin and this project's token, or Ethereum and this project's token. You have to come in and you offer equal amounts of both of those to put into the pool, and then they give you giant amounts of interest in return. So and when I say giant, I mean some of them are like 400 or 500% APR. I mean, it's absolutely insane, because they're trying to encourage people to come in and add liquidity to their projects. So it's a really good way to go in and make money quickly, but you have to be worried, or you have to understand what impermanent loss is. So when your tokens go into those pools, they may or may not be locked. In most cases, they're going to be locked, and impermanent loss occurs when the price changes and you don't have any control over it. So Google that term. Another thing to look for on projects is whether or not they're doxed. Doxed means whether or not they have made their identities publicly available. So a lot of these projects are completely anonymous, or they're people that, you know, don't put their pictures on their website, or they don't have LinkedIn profiles or whatever. So when you're doing research on these projects and you see the founders listed on the website, and you know their LinkedIn and their work history is all there, and it seems legitimate, and you see videos of them on YouTube showing their faces, it adds legitimacy to the project versus other ones that are scamming and don't want people to know who they are. Another way to look when you're doing project research is how active the devs are. Going on the GitHub repository, looking up that project, seeing how often they actually have code changes, seeing how many devs are on that project. It's more of a nerdy thing. And then the last three things, Andy, this is kind of going to what you were asking about before. So the three types of consensus are proof of work, proof of stake, and delegated proof of stake. Proof of work is like what Ethereum and Bitcoin are. That is where you have giant buildings full of shelves, full of computers with custom ASICs that are working hashes as fast as they can. They are using so much electricity. If you've ever done or looked into mining Bitcoin, the first thing you do is you come to a website that's a Bitcoin mining calculator, and it has you go in and say, okay, what kind of GPU card are you using to mine your coin, and how much do you pay for electricity? And then it will tell you whether or not you will make money or lose money. In most cases, you're going to lose money unless you have, you know, you're in an apartment complex and your landlord's paying for the power. Or you have
Question
some kind
about
of renewable energy source.
question about Bitcoin. So when people say they're mining Bitcoin, because like when you're mining, you're going to get awarded a Bitcoin. But
Correct.
are you also processing the transactions and that's the incentive?
You are, yeah. So you still get paid small fees, even if you're not the first, in Bitcoin specifically, even if you're not the first one to actually mine the first transaction of a new Bitcoin. And it's very hard to do that now. I mean, the math, Bitcoin was designed so that when Bitcoin grew, the math would become increasingly hard. So they have to keep throwing more and more processing power, which requires more and more electricity. But to go back to your question, when you are confirming a transaction on the Bitcoin blockchain, you get paid a very small fee, very small. Not anything compared to what, getting a full Bitcoin when you are fortunate enough to mine a new one. And that's why in China, they have these gigantic data centers that are absolutely full of computers that do nothing but mine Bitcoin, because the more mining rigs that you have, the more likely you are to mine a full Bitcoin. And whenever you're the first one to mine that Bitcoin, then I mean that's roll right now, I guess somewhere around $35,000 or $40,000.
So the concept of mining Bitcoin, is that present in all cryptocurrency, or is that just that one? And other ones is different.
Those are strictly proof of work blockchains. So that's when you're actually doing the cryptography work, and it is a race to see who can do it the fastest in order to win, versus a proof of stake consensus platform where the richest person gets the final word. So in a proof of stake platform, the people that get paid the fees, or they get paid via inflation by being block producers or chain validators, get to be in that position because they own the most of those tokens. So the more tokens you own, the higher up the rank you are, and you get paid more by owning more. And then you have delegated proof of stake, which involves more human emotion, but I feel like it makes a better product. And it's what we decided to do for Telos. So Telos is delegated proof of stake, and that means that everyone in the world who owns a Telos token has votes. You get a vote for every token you have, you get a vote, and you get to vote for the chain validators. So all of us chain validators in DPoS are constantly 24/7 every day running a campaign to be at the top, to be voted in at the top. We're running a campaign that never stops. You're always campaigning. You're always trying to better your equipment. You're trying to better your speeds. You're trying to offer more to the chain in order to garner votes so that you can get more pay. All right, NFTs, non-fungible tokens. Who has heard of NFTs lately? It's been a lot in the news. So non-fungible tokens, just a couple of things. The first tweet that was ever tweeted, I think it was Hello World, big surprise. It sold a few months ago for $2.9 million. The artist known as Beeple, who he's an NFT artist and has just made art in fungible tokens that he's been selling. He took a year's worth, I think it was all of 2020. Every day he released a new piece of art, and he took the entire year and made a collage out of it and sold it for $60 million. Absolutely crazy. And now we're getting NFTs in places like Christie's, which, I mean, I would have, if you'd have asked me this 2 or 3 years ago when NFTs started to come out, if we would ever be auctioning anything off at Christie's auction house, I'd have called you crazy. And then music, music and art. Elon's girlfriend Grimes, she's real heavy in the NFT market, and everything she sells on there is extremely popular. So when I say that it's being sold, you are buying the rights to this digital asset. And you can call it yours and you can resell it. You can sell the rights to somebody else. And that is another way that you can make money investing in blockchain tech, because you can go buy or try to find that up and coming artist. I mean, it's no different than, if you were doing it in the real world, and go and buy their NFTs, and then you just collect all these NFTs and collect hundreds of thousands of NFTs that you can buy really cheaply. I mean, some of them will go for, a few cents. And then one day they might become really popular and you can sell them for $1 million. You never know. All right, so finding up and coming projects to ape into. We call people who invest in projects without doing the proper research, we call them the apes. Let's do a time check here. We got 10 minutes. So places to look are decentralized exchanges. Those are like PancakeSwap, SushiSwap, Uniswap, and Bounce.finance. Bounce.finance is one that we used for Telos recently. We raised about $3.5 million for marketing funds and exchange listing fees. It was fairly successful. You can go on there and find different projects that are going to be listing on Bounce. Most of those, almost all of them, are ERC20 chain, and you can do the research on those projects. Just be very careful, because when you release a project, there are scammers out there that release their same name project at the exact same time. So every project has a contract address, and you just need to verify that contract address matches what is on the legitimate project's website. You have centralized exchanges. They're more safe. That is, like I talked about, Coinbase, KuCoin. They're based out of Hong Kong, Binance US, and San Fran, but they're owned by China. So just be aware of that. And then you can check stats on things on different projects on CoinGecko and CoinMarketCap are the two that I use the most. So into the bull run. You hear that we're currently in a bull run. Whether or not it's alt season or is it Bitcoin season, what season are we in? So as far as the bull run is concerned, in my opinion, like 6 months ago, people started saying, oh, we only have 6 months left of this bull run. Whether or not the market would actually support that, I'm not sure. But because enough people said it and enough influencers said it, I think that it'll become a self-fulfilling prophecy. So that was probably 4 months ago. Whether or not we've got 2 or 3 months left in this bull run, who knows? But why did the market drop? This is really great timing for this. And the reason why it was a little bit delayed in getting out was because the market was so high. I knew that there had to be a correction coming, and so the timing of this thing worked out really well, since we did just have a correction. So this is the total crypto market cap all time, the last 12 months, and then the last 7 days as of today. Sorry, let me get a drink. So as you can see, 2018 was a bull run. It was great. It was when we launched Telos. We launched Telos kind of at the cusp. And then at the end of 2018 was the start of what we call crypto winter. And it was really hard. It was really hard coming out of launching a brand new project right into crypto winter. But it is what it is. Regardless, we were really excited in 2018 when the whole market almost hit $1 trillion. Never thought it would be there. And then you look at 2021, which has been absolutely insane when you're talking about $2.5 trillion of digital currency. It blows my mind. So the last 12 months, we look at what we started to really kicked things off. January I think it was like the end of January, beginning of February, when Tesla bought $1.5 billion of Bitcoin, and they announced that they were going to start accepting Bitcoin for Teslas. So that $1.5 billion investment, I think they sold 25% of that, And then that made up 75% of their earnings in 2020, which is just insane to think about. And then in the last 7 days has been a pretty decent correction. So we've got the combination of Elon going on SNL and admitting that Dogecoin is a scam or a hustle, I think was his actual words. And then you have Tesla saying that the environmental impact of proof of work blockchains is too high and they're no longer going to accept Bitcoin for payments for cars. And then you have China, who I felt like personally wanted to capitalize on these two market dropping events and then threaten once again, which they do every, like, it's almost like clockwork that China comes in and they threaten to say, okay, no more cryptocurrency. We're going to take it all away. And everybody freaks out and the market drops and the Chinese go in and then they just buy a bunch and then they don't say anything after that, which I feel like is what just happened and what we're coming out of this week. So the entire market lost in, just a matter of a week, lost $750 billion worth of value. And I think it's going to come back personally, but again, not financial advice. So standard operating procedure sometimes. This is a project that one of my buddies came out with on his own. It's called BSC Starter. He came out on PancakeSwap on the BSC chain, listed for $20. He pre-sold a bunch for $10. So, people could come and buy almost as much as they wanted for $10 a token. And then he listed it for 20. And then you'll always have those people that are going to instantly sell and they're going to drop the price. I mean, it almost always happens like that. And then it just started slowly working its way back up. And he made like $8 million in the course of 30 days. I mean, it's ridiculous. And then, we go back to a project that Cardano, the token symbol is ADA, that released back in 18 around the same time that we released. Actually, they released before Telos, but it's the same year that we did Telos. They had a lot of activity, went into crypto winter, and now have really bounced back with a vengeance. And they don't even have a product, and they're up 4,000% this year. I mean, it's crazy. This one is Chainlink. This is a really old school. This is like OG crypto right here. This project has been out forever and was always just pennies for years. And then this year up 1,000%. So, you never know. You never know. And I've owned it for that long. I wish I had more. I didn't own very much. But a little bit makes a difference. So anyway, that's the end of it. Is everyone's brain pretty much mush at this point?
You smashed it, man.
What's that?
Yeah.
You smashed it.
Yeah.
Question is, how do you go about trading with Tello? Because I bought some of Cello or Cello, if you want to call it.
I don't know what that one is, but Telos, we trade on the biggest exchange that we're on is KuCoin. They're the fifth largest exchange in the world. They are in China. It's based out of China. So, that would go back to buying through Coinbase as your fiat on-ramp, and then moving it to, I would say, depending on what gas is, I'd probably move it to EOS, honestly, and then trade or transfer that EOS to your KuCoin account, and then you can trade that EOS for Telos or trade it for USDT. Now, that is one thing that I didn't touch on, is that most of those international exchanges they do not have US dollar. There is a crypto called USDT, and the T stands for tether. So they tether to the value of the US dollar. It's really quite interesting the way that they got around a lot of the SEC laws. by doing this, but it's literally like you go in and you trade your US dollar in, and then they mint USDT for however much you buy, and then when you sell the USDT, they burn it. They burn those tokens. So as you trade it back and forth between the US dollar, it's really interesting how it all functions. But the USDT you can trade between exchanges and be able to utilize that to buy other crypto.
One last question. I know the other guys wants to ask some questions. So I'm still with the basic with Coinbase. So how do you recommend? I know you just mentioned certain things, but I'm still pretty much an infant in this world of cryptocurrency. But how do you go about? Let's say I want to buy some Telos. How do I convert, or how do I bring it into Coinbase if I don't have the other means to do it?
Yeah, so when you buy the you transfer your hard-earned US dollar into Coinbase. I mean, I'm not saying that you have to use Coinbase. That's just my recommendation. And it will actually be in there as USDT, or not USDT, USD, US dollars. Coinbase holds it. I do not recommend doing that with any of the international exchanges because I don't feel like there's any accountability. That's why I only trust Coinbase to actually hold my US dollar. Then I will buy another cryptocurrency, whatever I want, Bitcoin, Ethereum, EOS. Can't buy Telos on Coinbase because they're big and we haven't listed with them yet. They want $2.5 million to list. It's ridiculous. But you can buy whatever crypto you want, and then you can transfer that crypto out on the blockchain. At that point, it's gone. Like you can move it to any other exchange. You can move it to your wallet. You can, they have these little hardware wallets where you can keep it safe. They have wallets for your cell phone. You put it on there. They have wallets in your browser that you can securely store your private keys on. But you can transfer that crypto from one wallet to another wallet that is stored on your exchange, and then you can, and those are usually free. In a lot of cases, they're free. They may charge a small transfer fee depending on what gas fees are, but yeah, you can move it all over the world. That's part of the beauty.
So I think the distinction, like one of the big concepts, is that you owning the coin is the crypto key, where these exchanges don't actually hold onto your crypto keys. You're just getting them to do processing, right?
So it actually happens both ways. So there's a lot of discussion about leaving your crypto on an exchange because exchanges have been hacked. It is ripe for hackers to go in and try to hack an exchange and steal the crypto out of it. So if you're dealing with hundreds of thousands of dollars, after you make your exchange transaction, I would move it to a secure wallet, whether that is an encrypted wallet on your phone or something like a Trezor, 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 or some other kind of hardware wallet that you have to make sure that it supports the token type that you're talking about. But most people use like Anchor Wallet or MetaMask. MetaMask is one that I use, and I also use Anchor. They're both really good. But those things, what they do is they store your private keys in an encrypted database on your computer, and they integrate with an API to your browser to be able to allow you to sign transactions securely without giving up your private keys, or without you having to like access your private keys and copy and paste them. You can do it that way, but I don't recommend it because it opens you up to getting hacked.
I want to jump on one question. I know I said it's the last one, but
That's okay.
I know you're not a financial advisor. However, you mentioned earlier about the tax form and all that. I bought a few $100s of different cryptocurrency, but some made money, some didn't, and especially with the Bitcoin, I bought a fraction that just dropped right now. So in 2021, let's say I did not cash anything, I just kept it as it is, fluctuating up and down. I still have to, or how do you, like, how do you tell Uncle Sam, hey, I bought $200 this year and I made 50, let's say, but even though you didn't cash it, you didn't put it in a wallet. So you still
Right.
have to still tell them that you did a transaction or you made few transactions that year.
Yeah, so I mean, it's no different than you've got to pay tax on interest. If and there are some projects that actually pay out interest or interest like payments, right? You have to pay taxes on that. Bitcoin is not one of them. If you buy Bitcoin right now, again, you need to talk to your CPA. But if you buy Bitcoin right now and you don't sell it for 4 years or whatever, then when you sell it, you're going to have to pay capital gains tax rate. I mean, that's no different than most other investments.
So it's only on a sale point, not actually when you buy it. You buy it, you sit on it, you don't have to claim because you didn't really cash out. That's what
Correct.
I'm trying to say.
Yeah, you're
Okay.
just buying an asset.
Roger that.
JT, do you have any thoughts on? I've seen that Chia cryptocurrency come up. That's with the hard drive mining, and then also I have a little bit of an idea of Telos, but is Telos more of the service part or more of the crypto coin?
So who was that, by the way?
Joshua here.
Oh, hey, Josh.
My camera.
Oh, yeah, no
Hello.
worries. Joshua, good question. So I don't know. Are you talking like Filecoin? Is that what you said? You're really quiet.
Oh, sorry. Hold on a second. Is that better there?
A little bit, yes, sir.
Okay. No, the first one was I don't know how old it is, but Chia, like they say Chia Farming, CHIA.
Okay.
And that's a hard drive kind of, I don't know what you call it, proof of what, but
Okay.
so I was just curious if you had any experience or any knowledge on that.
I don't know anything about Chia specifically, but it sounds like Filecoin. If we're talking about hard drive mining, we're talking about decentralized storage.
Right.
I'm actually working on a decentralized storage project right now called DStore, where we're going to be doing the same thing. We're actually going to be, we have storage nodes that we have like a main gateway storage node that is in a data center in Virginia. And then we have another one in Europe, and we have another one in India.
Okay.
And then we have node operators that come in and they sync those files. So like we're competing with like Amazon S3 for storage, right? Or Azure OneDrive or whatever. So these node operators come in and they sync those files, and then they get paid in Telos for operating that storage node and making it available for people to pull their files off of. So it's like we're building our own decentralized storage cloud.
Okay.
And then the second question regarding Telos was what?
The second question was like, so you talked about all the different applications for like blockchain, and I looked a little bit on the website, but I'm not super versed in everything. So Telos, it sounds a little bit more like you have an actual cryptocurrency coin, but is it more than just like a finance option or application?
Yes. Yeah, absolutely. So almost every blockchain project is going to have a token for something. Telos's token, we actually, the way that our network is designed is you buy the token in order to have resources on the network. So you get your token will allow you to stake. You stake that token towards your resources. So then you have RAM, you get CPU, and you get network. So you basically get access to these resources that automatically refresh every 4 days. So you're able to come in and build an application on Telos using the Telos token, and it be 100% decentralized all over the globe. No one entity actually, I mean, even if we lost like 20 node operators, like the chain would still run. We have 21 chain validators, and then we have another 25 backups that the 21 get paid the most, and then the backups get paid half as much as the top 21. So there's the chain always has someone waiting in the wings to take your spot, and that's what I was talking about with that campaign, right? It's because of the voting. We get moved up in the ranks in the voting, but all of these things are crunching numbers and running decentralized applications via these transactions constantly. So does that help answer your question?
It does. I think
It
it's
is a
a
utility.
very deep thing. So who knows? Maybe I'll look up a little bit more on. I just glanced at the website, but
Yeah, if you go to telos.net/explore, you'll see like we have over 100 decentralized applications that run on our chain.
okay, great.
JT, how do you spell the Telos? How do you spell it? TLO?
TELOS.
Telos.
Yep.
Okay.
JT, I think at one point you had mentioned that Telos was helping to solve this problem about coins using so much energy or being, very energy inefficient. Can you explain a little bit how your coin is different?
Sure. Yeah. So, and that goes back to the delegated proof of stake and the voting. So versus like mining Bitcoin, where I have to have rooms and rooms and rooms of servers, I only have to have one, actually two. I got one primary one, and then I got a backup one, right? So most of the big node operators, the chain validators, are going to have one for backup anyways. If you go down, you don't get paid. So I just have in the servers. It doesn't take that much power. I've got like a 3.4 gigahertz HP server, like a G8 ProLiant that it's like a 3 or 4 year old server. It's just sitting in a rack and it's doing its thing. And it is doing number crunching, but it's not a competition. So it is validating the cryptographic hash to verify that it matches the same as everyone else. So we have a 2/3 plus 1 consensus algorithm. So as long as 2/3 plus 1 of all of the nodes, they're all linked together, every node talks to every other node constantly. And as long as 2/3 plus 1 agree, usually they all agree. There's been very few cases where we've had anyone disagree, and it's usually like a bug on their side or like a time shift or something like that. But yeah, as long as they all agree, then it just moves on to the next block every half second. So it's really efficient in that way.
And when you're talking about what they're actually agreeing on, that would be sort of the content of the block or the transactions that have happened in that block.
Correct. Yeah. So like going back, I don't know, slide 3 or 4, you've got all these transactions that make up a block, and then you get a hash. It's not like an MD5 hash. It's a little bit bigger than like MD5, but I can't remember the hashing algorithm. But you have this hash that is calculated based on the contents of the block. So all the other block producers are doing that same calculation to make sure that it matches. And then there's a 180-second period after a block is produced. There's a 180-second period where it is reversible. And if ever more than 2/3 plus 1 disagree on the contents of a block, they kick it out within that 180-second period.
Okay, that's cool.
So does every node process every block?
Yes. Every node processes every block at the same time.
How does that scale when the traffic gets real high?
I kind of asked myself the same question. It was the software is actually invented by the idea was the guy's name was Dan. Shoot, I can't remember his last name. Dan Latimer. It's his brainchild, and the way that they wrote the code, it's all C++. It's very fast, and we have pushed it. Right now, we're running it like 2 or 3 transactions per half second. So it's like 6 to 10 transactions per second is what we kind of average. When we launched the chain in 2018, we tried to push it as hard as we could. We pushed it up to 15,000. And that's just because we couldn't create any more transactions, like physically do the work to create more transactions, but the chain handled it. 15,000 transactions per second.
So are there some projects where you're like actually waiting in line to get processed if they're slower?
Right. That's a lot of the problem right now with Bitcoin or Ethereum is that say you go in and you do a transaction on Bitcoin, you buy Bitcoin and it doesn't show up for 10 or 15 minutes. That's because you're waiting in line. So on Ethereum, you pay for gas in order to what is called front running, which I didn't even get into that. But you can, if you want to pay a higher gas fee so that your transaction is processed before the next guy or the other 1,000 people that are in line behind you, you can do that. And that's what drives the gas prices up.
Hey, JT,
Yes, sir.
first off, great to see you, brother. Miss you.
Good to see you, Rose.
Could you speak a little bit about the talk about regulation by various government entities and what that means to or what it would mean to crypto markets?
Yeah, I can't a whole lot. I know I touched on it a little bit with China, and what I feel like is their fake posturing in order to drive the market down, just so that they can buy more. As far as U.S. regulation is concerned, it really comes down to the SEC and whether or not your crypto is a security. We at Telos, we've worked very hard. We talk about it at least weekly in our marketing, making sure that our marketing is legitimate, making sure that our people that represent our chain are not representing Telos as a security. You've got like the EOS project. They're in huge SEC hot water right now because they bought a billboard in New York City. One of those electronic billboards. It was like, want to get rich. It was like a get rich quick thing, right? Like you buy this, you will get rich. Well, that's a security. So the SEC has come after them. So it's yet another thing that you have to do your research on in order to make sure that you're not getting caught up in a project that could be considered a security when no one has filed the correct paperwork.
So are there coins that are securities, or is that really?
I'm not really even sure. I'd have to Google that one. I don't know that anyone's done the paperwork to become a security.
Okay, so if we hear news about this, then get ready for stormy waters.
Yeah. Or if there's a coin that like files as a security, that may be something that really makes it fly. I don't know.
So the biggest question I have is, will you be posting this recording somewhere so that I can go back and rewatch this and see what you said?
I will after I go back and watch it and make sure that I don't look like an idiot. I may post it to you guys.
Well, I feel like you've done a good job, and I'm going to need some help remembering a couple of the recommended routes that you mentioned.
Yeah. Oh yeah. Well, I'll definitely make the slide deck available. I'll email it to everybody that registered.
Oh, that's something. Thank you,
All
by
right.
the way.
You bet.
All right, JT, I got another one for you if you have a little more time.
Sure.
So I've been reading a little bit on the site. So what you're saying is, so how does this compare to like your traditional, if you're going to spin up a website on server hosting? When you say you have some Telos, you have stake in the computational.
Yeah, the CPU, RAM, and network.
Right. And how do the applications differ? Clearly, there's like the peer-to-peer transactions and so forth, but coming from that perspective, I guess, how would you say it's different?
So in with Telos or DPoS specifically, when when you say a website, what do you mean by that? Like you can't like run a website on there. You can run any application. Think of it as a centralized database, okay, that
Okay.
everyone in the world has access to, because literally that is what it is. If you're trying to do something, like, you would never do anything HIPAA related, you wouldn't do anything that required any kind of like real need for privacy. It is open for the entire world to go in and see any of the data. Now, whether or not they can make sense of it, that's a whole other thing, right? But
Okay.
using this centralized database, I can go in and build an application on it and pull data from all of these nodes all over the world, so that not one entity could say that I can't run my application on there. So, I mean, it's truly distributed in that way. I don't know that I've
Right.
answered your question though.
Well, so what I'm picking up is like, so in one sense, maybe this isn't the right way to think about it, but like Wikipedia, that's an open source, community developed resource, and anyone can go on there. So it's almost like if you were to develop a website that pulled from all of that data, because I heard you say database, so it's more of like, here's a bunch of information,
Right.
that you can connect to whatever application that you're making, essentially, and with a guarantee that it's not going to go down as
Yeah.
Parler did, for instance.
You can build an application that uses other people's data. You can store your own data on the chain, and for your application in your particular smart contract. Smart contracts are on Telos specifically are all C++. Ethereum is they do Go, and I think also C. But I mean, you're basically writing code. I mean, you're writing an application to run on the chain, and that's what they call smart contracts.
Okay. Makes
And
enough sense for now.
I'll send you some examples.
Great. That'd be helpful.
Well, we're about 20 minutes over, so I rambled a little longer than I wanted to. I wanted to leave more time for questions. But does
JT,
anybody
real
else?
quick,
Yeah.
I have a real quick question. How much is this coin worth?
Telos right now, or like what?
Yeah, this particular,
Telos specifically at this very moment is 16.598 cents. Not a whole lot, but
Well, like,
it was
you know,
it was worth
to be
33.
fair, a good time to get in, right?
Well, I personally, I feel like it's a decent time to get in anyways because of the correction that we just had.
Right.
But who knows for sure, dude. I've given up trying to predict what people's emotions are going to do to the crypto market a long time ago.
Well, I guess my next question is just for me personally. I'm the kind of guy that I might put like $5,000 and like never look at it again. Is this the kind of thing? Is this the kind of thing that would be for me? in
Yeah.
your opinion?
Yeah. So
I mean,
like
I'm not gonna go in there and do a bunch of stuff with it.
right.
I'm gonna go back to work and hopefully it
Sure.
makes me money at some point.
Right. Yeah. So that would be I would go to like Coinbase.com and buy what we call stable coins. Those are like your blue chips, your Bitcoin, Ethereum, EOS. These are all more stable investments, and you don't have to go to like the trading platform for Coinbase. You just go to Coinbase.com, buy some, hold it in the exchange. You can move it out to a secure wallet if you want to. But I hold money in Coinbase, and I'm never really that worried about it. But yeah, just buy and hold it and just leave it there for 2 or 3 years and see what happens. You never know. I mean, all these people are saying that Bitcoin's going to go to $100,000. So, if that actually happens, I wouldn't, first off, I wouldn't be surprised. because when people said that Bitcoin was going to go to $1,000, you know, it's just like, it'll never go that high. And then it went to 60, you know? So, yeah, I think we're going to see a fairly significant correction now that China shook out all the weak hands.
Okay, so Telos is not the kind of coin to do that with.
Well,
Is that
you
what I'm hearing?
can't buy Telos on Coinbase. There's a little bit more friction to buy it right now, just because we're a small fish in a big pond. You know, our market cap is only like 50 million versus these other coins that are multi-billion-dollar market caps. You know, I feel like Telos is severely undervalued. But again, I'm biased because I launched it.
JT, I know you want to cut loose one thing real quick. I've been super hesitant to link my bank account to any of these exchanges or wallets, and for obvious reasons.
Yeah.
But so I'm assuming the names you showed are safe and reputable.
Yeah, so Coinbase absolutely is safe and reputable. Yeah, so and it's just an ACH transfer. Like you have a few options. You can wire the funds in. Typically, I will wire funds in because that makes them it makes them able to move same day. So if I wire funds to Coinbase, I can buy the crypto and then I can pull it out to another exchange that day, versus an ACH transfer, which they have these instant ACH transfers now, where you say, okay, I want to transfer $2,000 from my bank account into Coinbase. They allow you to trade it instantly within Coinbase, but they won't let you pull it out until the transaction settles 3 to 4 days. So, you know, some people it doesn't matter. Me, I'm a little bit more active. I like to wire the funds. Regardless of the fee, and the ACH is also free. So you just put your bank account number in there and transfer the money over. And I do trust them 100%.
One thing I did a couple of years ago along that same line, because I didn't trust things at that point, I actually set up a separate bank account and moved money from my one to the secondary one, and then
That's smart.
launched into the market. So
very smart.
Do you have any comments about, I think there's some ETFs that are going to start tracking some crypto.
I saw that. That was big. I saw that in
You have any
Reuters
gut feeling
News
about
the other
that?
day. No, I don't have any. I don't have any comment, but it would be really exciting. I think, Dad, didn't you send me that article? Yeah, it's like money market article or something. Yeah, that would be huge. It would be huge for the entire market. I think that there's been so much pent up demand, and now these fund managers are like trying to figure out how they can make money off of us.
Yeah, I saw that Schwab was looking into crypto, which I don't know what that means. But maybe I should talk to my Schwab guy and
Maybe so, yeah.
see if I can just go buy Bitcoin straight from Schwab.
Yeah, exactly. Yeah, that'd be a good way to do it so that you can avoid more taxes too. If you can like stick it into a tax sheltered fund or something like that. I don't know. All right. I think we're going to shut it down, guys.
Thank you, JT. But would you do a follow-up on, like, you know, the market and what are you, how Telos going and all that? Would we do another meeting like this, or this is just like one of a kind type of explanation of what's going on?
Yeah, it was more of a kind of a one-off just to see how it goes. Like I said, it was just really well received when I did it in person with a couple of groups. So I just figured I'd open it up to a wider group of folks. I may look at doing a second one. I don't know. I'll think about it.
Awesome. Thank you, brother. I appreciate your
thanks,
time.
JT. Appreciate all your time.
Absolutely. Yeah, thank
Thanks,
you.
appreciate it.
Hope it was informative.
Thank you. Good job.
Yep. Bye, y'all.
Bye.